All right, welcome to our home buyer seminar webinar. I'm so grateful that you're here, whether you're 2 months, 2 years, or 10 years away. Definitely want to give you a lot of knowledge. So I'm going to educate you on the process and inform you on different parts of buying a home. So hope you enjoy. Let's get started. So what are we covering today? Steps to buying a home. Who are we? Who's part of the process? What's our game plan and credit score? And lastly, if you are looking to schedule a call with me, a Zoom, or even in person, there's gonna be a link at the end that you can do that. So let's get started. All right. So who are we? This is a brief description of who we are. Don't want to bore you with the details, right? I know you're here to learn, so let's keep moving. So pre-approval. Step one of buying a home is to get pre-approval. Well, actually, the actual first step is to meet with a professional like myself. I've been doing this for quite some time, so I can give you a solid roadmap. But either way, these are the steps. So step one, pre-approval. So how do we get pre-approved? What happens and what are the details? So step one, pre-approval. You're going to want to meet with your bank, your credit union, or meet with a realtor like myself who can give you a few referrals for mortgage planners. What they do is they take your documents, your income documentation, your credit score, your credit history, your work history, and then they input all that information into a computer and give it to their bank. And then it lets them know, based off of your income, your credit, and a few other factors, how much you can be approved for, right? So once you've completed this process can take maybe a day up to even a month, just depending on how much documentation you have. But typically it takes anywhere from 1 to 3 days to let you know, like, hey, you are approved, or you're going to need a little bit of work. Either way is great, right? Because now you are informed either way. So best case scenario, you're approved for the amount you want, and we can get started. So let's just pretend that you got approved for the amount you wanted and you're approved. Here, really quickly, I want to talk about credit. So let's say that you don't get approved for what you want and your credit just needs to rise up to maybe the minimum standard of what that loan requires. Here's a few factors that they look at for credit, right? 30% is your amount owed. So a great tip is to keep your usage rate under 30%. Disclosure, I'm not a credit specialist. However, this is what I've seen in the past. The other big pillar is payment history. So make sure that you're not having late payments on your record, because payment history and amount owed make up 65% of your credit. So make sure you're taking care of those two. Step two of buying a home. So search for a home. So that's when you get with myself, we put you on a search. So whether you're looking resale or new homes, I have access to both. The best part about it is I get real-time access. When you're looking on websites like Zillow, Redfin, Opendoor, any of those websites, those are third parties. So they don't have, sometimes they do have accurate, but a lot of times the listings that you'll see there are older listings. So I'd hate for you to fall in love with a home that you can't get because it's not available anymore. And when you work with someone like me, I have real-time data, right? And I can give you the resale homes, I can give you the new homes, and I can analyze exactly what you're looking for and go find it for you. Much easier than you going across 17 different websites trying to find that home, right? So search for a home, right? Once you've actually found a home that you like, what we do now is we drive around, we found that home, we're going to place an offer. So let's talk about that next. So placing an offer, right? Once we've found the home that you and your family, or maybe it's just you, like, we're going to place an offer. So there's going to be different terms and conditions that we're going to want to go over to make sure that we're putting the best offer. So a few of those are contingencies and personal property. So there's different things that we're going to want to negotiate inside of that offer. So I'll tell you due diligence, appraisal, loan contingency. These are all things that will protect our earnest money. And these are timelines that you need to accomplish certain milestones inside the contract. So that way the seller knows that you are, acting in good faith and you're not wasting anyone's time, right? But you're also getting your side of the contract done. So typically some things that we look at in the contract is due diligence. What is that? That's the period in which you want to get all your inspections done, negotiate repairs, and if you want to back out for any reason, this will be the time to do that. Appraisal, what is that? Appraisal is the timeline where the bank sends out an appraiser to make sure that the home is worth what you're offering. So for example, let's say that you see a home and it's 400,000 and you want to offer 400,000 for it, right? It's listed at 400, you offer 400. However, the bank tells us, you know what? No, we only think it's worth 390. Well, the bank is only going to lend on that 390. So then there's going to be negotiations in place, which we'll talk about a little bit later. Anyways, these are a few of the contingencies. So you're going to want to review the offer with your real estate professional. So that way we're putting educated offer. So let's keep moving. So after you put the offer, you get accepted. We're going to go in, we're going to open escrow. So you have your EMD, your earnest money deposit. So this is deposit you give in good faith, saying that you are going to follow through with the home. And this also goes towards either your down payment or your closing costs at the end of the transaction. So, and on the seller side, let's say that you don't, do your due diligence in time, your appraisal doesn't happen in time, or your loan doesn't happen in time, then the seller could be awarded. I don't want to say awarded, but they could get your earnest money. Like you could forfeit your earnest money to that seller if you don't perform during the timelines that you said you'd perform. So this EMD goes into a middle party called escrow. And that's where all of the contracts, all of the money gets, that's where all the money and the contracts go to make sure that everybody's playing fair. So any money getting released, any contracts getting, executed, they have to be delivered to escrow. So that way they can make sure that everything is moving smoothly during the contract and there's no like one-sided events. So next step is home inspection. So what is a home inspection, right? This is where as the buyer, you're always going to want to hire your own, right? You don't want to hire one from the seller because you just never know, right? You want to get your own home inspector who you like and trust, right? We can provide you some options that have worked well in the past. You're going to want to get your home inspection just to see that, okay, is everything in the home working how it should be? Because they're going to let you know, like, hey, the plumbing is an issue here, there's a leak here, or maybe the roof's damaged. But either way, they're going to do a full, thorough home inspection and tell you what's going on with the property, what's the condition. And of course, if you're buying a resale home, there are going to be things that come up, sometimes minor, sometimes major. And with that context of it being a resale, like an older home, or maybe it's a newer home, you'll ask for repairs. So request for repairs. After you finish that home inspection, there's going to be a request for repairs period, right? That's within the due diligence period, right? So this is where you ask like, hey, inspection came out, we saw, I don't know, let's say these 3 things, they're non-negotiable, we need to get them repaired. So then I'm going to write that up. We're going to deliver it to the other side. Like, hey, these 3 things came up. We really need them repaired. And then the other side, the sell side, the listing side can tell us, hey, we'll fix this. We won't fix this, or we'll give you some money instead of the repairs. And then you can get it done at your own time, which is pretty common, right? And depending on which market we're in, whether it's a buyer's or sellers, or it's a balanced market, will tell us, how much of these repairs will probably get fixed. Like right now, at the time of recording, we're more so in a balanced / buyer's market. So I see any repairs that I see requested from my buy side, I see a lot of them getting fixed. However, when we shift back to a seller's market, a lot of those repairs, they're a lot more negotiable, and some of the sellers aren't going to be doing those repairs because of how much leverage the sellers have. Either way, I don't want to get you caught up in the details of that, right? Like I don't want to go too deep and too technical. So just either way, after you get your home inspection done, there's a request for repairs period. Let's keep moving. So contingencies. So we briefly talked about this prior. So there's three big contingencies. There's due diligence, appraisal, and then loan, right? Loan is how long the lender has to get your loan done before having to forfeit your earnest money. Appraisal is the time the lender has to, or the bank has to send out an appraiser to get the property appraised. And then due diligence is a period right at the beginning for about 10 to 12 days. It's negotiable. You can pick however long, right? That's the period in which you do your inspections, and then you request for repairs, and you can back out for any reason. So those are some of the bigger ones. Once we actually sit down and we have a consultation, we'll go deeper into this. So we talked about appraisal. So I know we talked about it briefly earlier. So the big part about appraisal that I want you guys to know is when a bank sends out an appraiser, right? They're looking at other properties in the area to see how much they believe it's worth. Okay. They're only going to finance on that amount. Okay. So like we said in the example earlier, let's say that you're offering 400 and the bank says it's worth 390. That 10K is a negotiable amount. So a few things can happen. Either as the buyer, you can pay the difference in cash. Number two, seller can come down and then sell you that home at 390. Number three, let's say that it is at 400. However, the appraisal comes in at 425. Well, as the buyer, congratulations, you're getting an extra 400. You're getting an extra 25,000 in equity, and that's not something that we have to disclose to the sell side. So that just actually happened, recently for a few of my buyers. And then the last thing that you can do. So option number 4 is maybe buyer and seller can't agree, and then you can just back out. So that's the gist of appraisal. So let's keep moving. Underwriting. So after you complete due diligence, appraisal, request for repairs, all these other steps, underwriting. So this is the period in which the lender they already have the appraisal and they've already collected most of your docs. Now they're just trying to get a loan completely done, right? So this is them going back and forth with the loan servicer to make sure that everything's good and we're getting ready to close. So once that is completed, then we can schedule our walkthrough. That's when we're going back to make sure, okay, did you take care of the repairs we asked for? Are the walls still up in the house, right? Is it still in the same condition in which we saw it? Or is it in the condition we expected it to be? Then fantastic. We do a walkthrough. And once the walkthrough is completely done, you do a signing, right? You go to the title company and you sign for your documents, and then we close. So those are the 10 steps to buying a home, right? Obviously, there's a bunch of other micro steps, but these are the major steps in buying a home. So if you have any more questions on this, I will tell you this. What is the next steps after this webinar? I have a link here. Schedule a call with me. Let's talk about it. I'm very non-pushy. Like, my biggest thing is I just want you to understand the process so you're educated, right? My biggest thing with homeowners or home buyers is they're always trying to fix their credit by themselves. They're always trying to come up with their own game plans, and they just simply aren't doing the right steps. And it's just taking them so much longer. So for a great example I'll use right now is if you would have bought a home in 2020 or prior, instead of waiting until 2023, your purchasing power, you lost about 17% in purchasing power. So for every 100,000, you lost about 17K. So let's say you were at 400K in 2020. When you got to 2023, it was way lower, right? So that's just what inflation showed us. So that being said, I hope that you take the next steps on scheduling a seminar. So if you want to learn more, if you want to just put together a game plan, I definitely invite you to scan the QR code here, or there's going to be a link down below that will take you straight to my calendar. And let's talk about next steps. Whether you're ready now or you're ready in 2 years, both are the same to me. I'm still going to be in business. So I definitely encourage you to take that next step, and I'll see you on the next one. Take care.